Hi guys, this is Ravi from the Nifty BN channel. In this video, I would be answering some common questions raised by the visitors on my previous video, My Trade Setup, the Installment Collar Options Strategy. So if you have not watched that video, I request you to watch the video first and then watch this. The link to the video is provided in the description. The first question is whether synthetic futures can be used in place of futures in the installment collar option strategy. So what are synthetic futures? A synthetic future can be a good low-cost alternative to a futures contract. A long synthetic future can be created by simultaneously purchasing an at-the-money call option and selling an at-the-money put option in the same underlying asset with the same expiration date. In the same way, a short synthetic future can be created by simultaneously selling an at-the-money call option and purchasing an at-the-money put option in the same underlying asset with the same expiration date. Theoretically, synthetic futures have a delta of 1 for the long version or -1 for the short version and a gamma of 0. But we might face some issues while we try to construct synthetic futures on Nifty. At any point in time, there would only be three valid future contracts available for trading: the near month, the next month, and the far month. So, if you wish to trade, say, a December month futures contract, there is no other alternative but to go for a synthetic future. But you might face some liquidity issues. As mentioned before in several of my videos, when it comes to long term options, only strike prices around round numbers such as 8,000, 8,500, 9,000, 9,500, and 10,000 tend to have higher open interest and thus provide more liquidity. Also, the wide bid offer spread, usually associated with the long term options, can have a negative effect on the quality of the trade. So, say if Nifty is at 10,325 and you wish to create a December month synthetic future. It is difficult to create one as by definition you need to buy a December 10,300 call option and sell a December 10,300 put option. There might not be enough liquidity at these strikes and the broker might not be able to fill your order. The second question is actually a request to share the risk graph of the installment collar option strategy. For example, say you initiated the following trade on Nifty. Buy one lot of Nifty August future at 10,412. Buy one lot of Nifty December 12,000 put at 1610. From the risk graph, it is evident that the upside is uncapped, but the downside is limited. Now, if you wish to sell a near-term call against the position, the trade would then look like this. Buy one lot of August future at 10,412. Buy one lot of December 12,000 put at 1610. Sell one lot of July 11,900 call at 6.65. The upside would now be capped at the strike price of the sold call option, but the risk would go down as you would collect premium from the sold call. Selling the call option after there is a rise in the price of the underlying asset has a higher payoff than doing it simultaneously with the bought options. The third question is, which discount broker allows you to buy or sell long-term options? I trade with Zerodha and it allows you to both buy and sell long-term options. For details on which contracts are allowed for trading, please check their website. Go to google.com, type in Zerodha margin calculator. Click on the first result. Here you would see details on which contracts are allowed for trading on both Bank Nifty and Nifty instruments. I suggest you check this website before you initiate a trade. I observed that on some days when volatility is high, they impose some restrictions on which contracts are allowed to trade. Also, on most occasions, there is restriction only on going long and there is no restriction on going short. Also, when one of the frequent visitors to our channel, Mr. Tony Thomas, put the same question to Zerodha, this is what they have to say. The allowed trading range is restricted to keep the OI utilization within sanctioned limits. However, We are working with a custodian, Orbis Financial, to enable trades in all Nifty and Bank Nifty option contracts for our clients. You will need to open a custodian account with Orbis, but you will be able to continue to trade with us using Kite. In this setup, your funds and trades will be settled through the custodian, as opposed to directly settling with us. As more Zerodha clients move to Orbis, the overall open interest utilization for us will also reduce. Although you will still be able to use Kite, there are some restrictions. You will only be able to trade in futures and options. The equity segment will be blocked for you. You will not be able to pledge holdings as collateral while trading. Please raise a ticket below to request migration of your account to Orbis, and our team will reach out to help. If you still have any queries on the installment collar option strategy, please post them in the comment section. I'll be more than happy to answer them. Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like the video and subscribe to the channel.